what the fuck is a tax deduction?
I always write off my hair. Always.
Oh my god! Oh my god.
God. So here's the facts. You want to be tracking all of those expenses because those expenses can lower your taxable income.
I'm so excited. Like, how do we do that?
The tax bill goes from $15,000 to $6,000. That is the beauty of tax deductions.
I got my hair done today and now I'm recording. That would apply.
The revelation of the year.
So simple.
This is the whole point of us doing this. Knowledge is power, but money is also power. And the more money in your pocket, the better.
Absolutely, girls.
Okay, we're ready. I got a lifetime of knowledge.
Let me call Mimi.
Welcome to Actual Experts. I'm Caitlin.
And I'm Lundie.
And we don't have all the answers, so we are going to ask the question.
And today we are asking, what the fuck is a tax deduction? To actual expert Diana Gleason, the founder of DG Accounting Agency, a professional bookkeeper, and an all-around expert in how to cut some money for taxes.
Literally figure it all out. We even going back and forth with her was so funny because we were so confused with what tax deductions were in bookkeeping. We sent her a list of questions that she was like, this is not right. So
It was like, it all goes to show, like, we need an expert to explain to us what a tax deduction is, because apparently we don't know.
Yes. And I'm very interested with this for us specifically because I want to ask her, what's the difference between a hobby and a side hustle in the eyes of the tax man? Because can we deduct some of our podcast expenses?
Yeah, I know. It's like, does it have to link back to a business? Or like a registered business? Do we have to register actual experts as a business? Or can we just say, like, this is our business?
Should I jump into some fun key facts and figures about tax?
Give us some key facts and figures about tax. And then I also want to know if you do your own taxes and if you've ever successfully written off anything.
Let's start with that, actually. No, I do not do my own taxes. I have a very lovely man named Tony who does it for me. But what I will say is, as a contractor, I've gotten better at tracking my expenses. So like flights to conferences or tickets to conferences or whatever. I used to just be so bad at it and be like, bleh, whatever. But now I'm like, no, I can deduct that from my taxes and lower my taxable income. So I've gotten better at that.
If you don't know how to do that, then who knows how to do that? And I remember I was talking, because I used to do my own taxes for the past couple of years. Every single time it's tax season, I do it wrong. And somehow I'm like, I'm going to be arrested. The IRS is coming for me. Like, I endeavor to do them correctly. And somehow something always goes wrong. So this year, as I've already bragged on this podcast, I did hire an accountant, Guillermo. Shout out to
Guillermo.
Yes, I just basically threw all of there's like a portal that you upload all your stuff into. And I like threw it all in there and said, good luck out there, because I've never been able to figure it out. So I have lots of questions for Diana around like what qualifies as, what does the IRS say? There's like a term for it, like real and defendable or something. It's something like indefensible with liberty and justice for all. The term is ordinary and necessary.
Oh, yes.
Like the IRS deems something as ordinary and necessary, and then I guess that can apply as a deduction, I think, but
okay.
I'm not
well,
sure.
This is actually a good lead into one of the things that I added in, because I was thinking, obviously, we're having a very US-centric conversation right now, but I was thinking, and conceptually, it's probably similar in different countries. So I did look this up for everyone who is not in the US. So the question, are tax deductions similar in other countries? And the answer is broadly, yes, they are. The categories deductions are similar across the US, Canada, and the UK. So those are the three countries we put in the buckets, because they're all built around the same core idea. You can deduct, and there you go, ordinary and necessary / reasonable costs incurred to earn self-employment and business income. So this is very specific. Episode is going to be very specific to people who are contractors, independent workers, self-employed, have a side hustle. But to that point, there will be similarities in the other countries to what we're discussing today. Obviously, everyone has to do their own research and speak to their own tax or bookkeeping specialist, but the themes will be the same.
As we say, yes.
Your actual expert that's certified in your country of residency as the tax.
Or a bookkeeper, as Diana Gleason Is that different from an accountant, a
It
bookkeeper?
is.
Oh, who knew? I didn't.
Well, I only know that because I live with an accountant in his previous life.
Well, if I may just
Yeah.
read off the difference between an accountant and a bookkeeper for the purpose of this episode. Bookkeeping is the daily systemic recording of financial transactions like sales, receipts, and payments, focusing on accuracy and organization, while accounting uses that recorded data to provide strategic analysis, interpret financial health, prepare official statements, and advise on business decisions. Interesting. Okay, so bookkeeping is like the day-to-day habit
Yes.
of tracking your expenses, and then accounting takes that information to do stuff with it, like analysis and stuff. Okay, who knew?
Not us. Again.
All right, some facts and figures. So first is that about, again, US centric, sorry guys, but hopefully kind of relevant around the world. About 1 in 6 or 16% of US workers participate in the gig economy, i.e. freelance or contract work, which led me to ask, what the fuck is the gig economy? What does that mean? It is a labor market defined by short-term, flexible, and freelance contracts rather than permanent employment, often facilitated by digital platforms and apps such as Uber or DoorDash. Interesting. Okay, this really goes back to my main point of being like, I will be arrested every April. The
Yeah.
IRS audits less than 1% of individual returns every year, according to the IRS. Less than 1% of freelancers, contractors, gig workers, they are checking.
Do with that as
So
you will, girls.
didn't hear from me, but I sometimes do think about that, like not to go down the hole, but like
Yeah.
being like, who's tracking all these people? Like the amount of money that moves
Totally.
daily around the world. I'm like, little old me paying my like whatever $20,000, whatever it was last
Yeah.
year, and I like miscalculated a few $100s. I literally was like, that's me done. I'm going. They're picking
No,
me up, and I'm.
my favorite
Yeah.
Lundie tax story is when you paid your taxes twice. Literally, we're on a work trip. She comes out of her room, ashen, like no color in the face. Is like, oh my god, I have no savings left. I just paid my taxes twice.
I did. I was filing on stupid like taxslayer.com or whatever the thing. And I like clicked approve, like pay my taxes. I had forgotten that I had linked my bank account. So then in my head, I was like, how do they get the money from my account to
Yeah.
like I forgot it had been linked. So then I read somewhere, I think I Googled like how to get my money
Yes.
to the IRS. It said like do a wire transfer from here to here. And I was like, well, thank God I read this because otherwise they wouldn't have been paid.
Could have been
And
evading.
then I did that, and then I got the confirmation from taxslayer.com, like, we will do your deposit. And I was like, duh, I did it twice. Don't do the deposit. I was like on the phone. I was like, this is all my money.
Oh god.
And now it's gone. I know. So
Okay.
anyway, how crazy? Only less than 1%. And I do wonder if that's going to change with AI.
AI. I know. It's
Has
true.
to, surely.
Not to our not really good for the average taxpayer, but
Much
great
to our
for.
chagrin. Okay, who is our actual expert today?
Okay, so Diana actually reached out to us, which is very cool. She listened to our episode with Cam Rogers on investing and was like, love this, but also love the concept of getting knowledge into the hands of more women. So she reached out and we love that. So Diana Gleason is the founder and CEO of DG Accounting Agency. It's a US based bookkeeping firm supporting more than 150 monthly clients nationwide. Very cool. With a team of 15, she helps self employed professionals, creatives, and business owners turn their financials into powerful decision making tools, not just compliance requirement. Okay, that's where we said the specifics of this is going to be for contractors. Specializing in entrepreneurs, Diana goes far beyond categorizing transactions. She teaches business owners how to understand their numbers, increase profitability, manage cash flow with confidence, and make strategic decisions backed by real data. Her core belief: when you understand your numbers, you stop guessing and start leading.
Knowledge is power.
Knowledge is power. Okay, I'm very
You are.
excited to meet her.
Awesome. Let's bring her on. Woo.
Woohoo.
Please note that this pod is for educational purposes only. Nothing we say should be taken as financial, legal, or medical advice. Please do your own research, and when in doubt, ask an actual expert.
But let me start off by saying, First of all, so nice to meet you. And thank you for being patient with us nailing down what we're talking about today. We
Yeah.
appreciate it. We're so excited to have you.
Yeah, we were saying on our pre-recording that this just shows even more how much we need to speak to an actual expert about this, that we got the questions wrong. So it's really good to have you joining us because obviously we need the help.
I'm so excited, and also, I've just been, like, in your content in the last 24 hours just to, like, prepare for today, and I just want you guys to know that, like, I think your podcast could freaking take the hell off. Like, I mean, like, what you're doing, like, the back and forth, just the two of you, the banter, like, all of it is just so digestible, so real, so human. Like, I feel like you're call her daddy. Like, it's coming. It's coming for you.
That is so nice.
The ultimate compliment, truly. That is the
Yeah.
North Star. So thank you. That is so kind. We
Yeah.
appreciate that.
Okay,
Good.
so I'm just going to give you a quick lowdown of how this is going to run. The way we run every single podcast is we speak to an actual expert, and one of us will be the lead in it. So they will do all the research, come up with the questions, all of it. And then the other person, which in this case is Lundie, is going to come in blind. So she, in this case, will have not done as much research. And the idea behind that is she's basically the voice of the listener. So she is going to stop us and say, wait, that word, I don't know. Or can you explain this a little bit more clearly?
Okay, good.
Amazing.
it.
Cool. Okay, so today's topic, which is so hilarious because we never thought we would say this on a podcast, is what the fuck is a tax deduction? But it's so needed. We were in our pre-recording talking about this and we were like, we don't understand this. We might have paid our taxes incorrectly. So we're super excited to get here. But I would love to know from you, how did you fall into this and why the specifics around going for the creator economy, gig economy, all of it?
Sure. So I'm a former creative. My first life, I was a professional dancer. So I grew up dancing. I went to performing arts high school. I have a BFA in dance. I've danced professionally in New York and across the country. I always say I got desked because I had a hip injury followed by twin pregnancy. And I am now the mom of twin, almost 11-year-old boys.
Wow. So it's
So I
busy.
had a hard career pivot into small business bookkeeping, and I jive with the creative community because I am one.
Totally. And did you watch the Taylor Swift documentary? Because my favorite part of that was the story of the dancers. I
It was so good. We binged it over Christmas break with my
Yes.
kids. My kids
Yeah.
watched every single bit of it, and you know, what's crazy is that there's a time in my life, if we go back probably 10 years, where I had friends on those tours and
Yeah.
in those films. Like, you know, I have a great friend that was in the Madonna documentary. Like, it's just so fun that, like, you
So
know,
cool.
getting to just see the next generation of dancers doing it.
Totally. And I hope that you're doing their taxes or their bookkeeping. I hope that you're as independents and creators. They are creatives. Yeah.
Yes.
So much
Yes. I have a
talent.
lot of people in that space as clients.
Okay.
Cool.
Amazing. So how did you then go from dancing to bookkeeping?
So, as I say, I got desk. So I had a major hip injury that needed surgery. So it was like rehab, surgery, rehab. It took me out for a whole year. And at that time, who I would call my dance mom, she was sort of like my mentor. She had a friend that had a nonprofit that was local to where I was living, and they just needed like some admin help. And I was like, well, let me jump on in here.
Yeah.
And so they hated the bookkeeper that they had. And she came 4 hours once a week. And they were like, Diana, can you just learn what she does? Because we need her to not come here anymore. And I was like, okay. So I did. And it was sort of just like, I just kind of learned as I went. And then from there, I had my twins, and daycare for twins costs about as much as your mortgage payment. So that wasn't really an option. For
Yeah.
me, my husband, you know, is a W-2 sales guy. So he was carrying our family at that time. And I took a remote job working for a firm similar to mine for 6 years. And so I was able to work part-time, be a mom in the throes. And then I went and launched out as an entrepreneur.
Wow.
Amazing.
Wow,
Love it.
what a journey. And I have to say, in our intro, I had to look up the difference between a bookkeeper and an accountant, which we did discover. And so that was new information as well.
Very
So,
different.
yeah.
So we made it super clear on our intro that this conversation would be very specific towards independent contractors, people with a side hustle, self-employed. But I wanted to understand from you how the tax man would differentiate a hobby versus a side hustle.
Sure. So here's the facts. The facts are if you are receiving income, even if you consider it a hobby, but you are taking money from someone for a service you are providing, then you have more than a hobby. You have a small business. And it might just be you're a solopreneur and you're just claiming additional income to your W-2 income on your tax return.
Okay, so this can be additional. So if you're a full-time employee somewhere, you have your 9 to 5, but on the weekends you're making epic pearl necklaces and your friends are buying them, that can count towards it.
Absolutely. Yes. And
Okay.
especially now, if you're doing like cash business, right? So you're selling your pearl necklaces for $100 cash, and we're keeping that out of the bank account where the IRS can't see it. We could kind of tuck that away as a hobby.
Okay.
But as soon as you take that sale to a platform, like
Mhm.
Shopify would be like a really popular one where we would use, or Etsy, are you selling
Mhm.
them there? Now the government's watching because we're taking money from a platform. They're charging us a fee. It's getting deposited into the bank account. And now we have a track record that this person is earning income not being taxed. And
Yeah.
that's what alerts us to need to do something with that money.
Got it. Okay. So then what happens in the scenario of you say like I have a business idea but I'm having to money up front for it and we haven't yet earned income but I'm working on this business. Where does that qualify?
So this is really important. And what you should be doing if you have a business idea and you're starting to invest in it, you want to be tracking all of those expenses because those expenses can qualify as tax deductions, expenses that will lower your taxable income. So even that W-2 income that you're making, we could use this bucket of expenses that we're investing to get the side hustle off the ground to offset our income and pay less in taxes or get a tax refund.
So even if you are not earning income yet from your business idea, but you're investing in it, that counts.
Absolutely.
We were talking about in the intro, Actual Experts, this podcast. We've invested quite a bit in this software, in these microphones. I mean, quite a bit, probably not on the grand scale of things, but we're getting there. And I thought that maybe the differentiator was that you had to register, you had to be a registered business. I didn't realize that it was just a matter of making income that like kind of ticks you into the small business category.
Because many people are what we call a solopreneur. So they don't have a formal LLC to say, I'm a business, right? And they're just doing this solo side hustle. It's still additional income. And then again, the expenses, the tax deductions that we can write off to offset the income. I also want to say for the listeners, if you are doing this, you should set up the LLC. You can do it on your own. You can literally chat GPT the instructions and get it done because it protects you, your person, apart from the thing you're building. So say the Actual Experts podcast, for some reason, somebody wants to sue you guys for something. I don't know why, but let's just hypothetical, right? The LLC protects you from the business. So it's always like just get it done. Important thing to just do.
Okay, that's good to know because we had one of our experts said something to us and it kind of opened our eyes a little bit. She said, your podcast is actually political because your name is Actual Experts and you're saying that some experts who claim they are out there aren't actual ones and you guys are interviewing the actual ones. And we were like, we in our mind we're like we're going to be bipartisan, we're just going to speak to experts, this is like women will have access to knowledge and we'll do our best to get like diverse knowledge into their hands. But she said that to us, and so when you're saying someone would sue us, we're so small. But it is such a good point that if we bring an expert on or we say something that someone might not agree with or feel is offensive, the risk is there. It's a very
Is there. So be protected because we don't ever want that to affect your personal lives. And as you two move on and grow and you have families and children and all of the things, you know, you don't want anything that happens here on the pod to affect that.
totally.
Note to self.
And he's like,
You
Add
got
it to
this.
my very long to-do list.
Yeah, exactly. But so practical. It's so practical because I think a lot of people, especially at this age, in our early 30s, and so I'm seeing a lot of our friends are really starting the entrepreneurial journey, like for real, like to really
Mhm.
kind of scale
Totally.
things. We have a couple women founders who are close friends of ours who are doing amazing stuff, but I don't know if anyone really knows the process of legitimizing that and then what that means for finances and taxes. And I certainly don't think anyone's thinking about bookkeeping super methodically from the jump. So that's where this comes in. You come in.
Okay.
Yeah.
That actually brings us to the topic of the hour. What the fuck is a tax deduction? So, could you walk us through that in plain English? What does it mean? How do we use it? All the good stuff.
Absolutely. So a tax deduction is really simple. All it means is an expense that's going to offset your taxable income. So we're going to take the expense and lower your taxable income, which lowers your tax bill. That's
Okay.
the most basic understanding of it.
And so when you do that, so you're lowering your taxable income, it means that you could potentially qualify for a lower tax percentage and therefore pay less taxes. That's the result.
Correct.
Okay.
Right. Can I give you an example?
Yes, please.
Okay. So say you are a side hustler and you make $50,000 on your side hustle. Hypothetically, you're going to owe about 30% of the $50,000 in taxes. So that's $15,000
Mhm.
to the government. But we can use tax deductions to take that 50 and turn it into something much lower. So we might have expenses, costs. If we use the podcast as an example, you've got software, you have equipment, you have editing costs, you might have advertising costs. All those costs would then offset, let's say, the $50,000 that the podcast brought in. So if we could take the 50 and get it down to 20, the tax bill goes from 15,000 to 6,000.
Yeah. So interesting.
That's nice.
Yeah.
That is the beauty of tax deductions.
Yes.
And if you don't know what that means or what applies or qualifies for that or how to do it, then you miss
You're just
out.
paying the government lots of extra money that you could have kept.
Totally. Okay. I'm so excited. We're going to learn like the practical stuff. It's like, how do we do that? How do we get there?
Yeah.
I have a side question from that. So we spoke about opening up an LLC if you have this side hustle. Do you then, in this case, pay taxes from the LLC versus your personal if you're earning from there and your expenses are tied to it? So it doesn't lower your personal income, but your corporate income?
All rolls together.
Oh.
So in the US, if you have an LLC that is just taxed plain as an LLC, there are different ways to tax an LLC. One of the most common ways is called an S Corp. But if you are just an LLC, which is most people, right, that would have both scenarios, a corporate income and a small side business, then what happens on your tax return is your W-2 income comes in on your personal side, and then there's an additional form called a Schedule C. And this is where the business activity goes. And when
Okay.
they come together, they offset each other. So I'll give you my own real life example of this. My husband has a W-2 job.
Yeah.
I am self-employed. We file our taxes joint married.
Right.
When this happens, his money comes in, my money comes in, and he's been paying all year long on a W-2, right? With taxes being withheld. I'm over here doing my business activity, taking all my deductions, lowering down what looks like real taxable income. And when they
Right.
come together, they might say, well, on Diana's side, she owes $10,000 in taxes. But on Matt's side, my husband, he had $30,000 withheld. So they're going to get a return of $20,000.
Oh,
So
interesting.
it all comes together into the personal return. If you're just a basic LLC, not taxed as a corporate, like a S Corp.
Okay.
Can I ask not to complicate it, but if you, let's say you had a W-2, like a full-time employee situation and your LLC, so you had both, and Matt, your husband, had the same. He had a W-2 situation
Right.
as an employee and an LLC, does it just all, it always just all combines? So it's just one
All
big,
combines.
all the income, and they do the kind of transaction of what's been withheld, what's come in, what's been deducted, and then that's what you owe on as like your taxable income, basically.
Yep, exactly. Yep.
Okay.
And on your tax return, it's called adjusted gross revenue. So they bring it together and they go adjusted, the actual income is, right? We might have thrown all together $300,000 and then they've adjusted it down to 190 that we're going to pay taxes on.
Ah, okay. You know, I always saw that on the form. Didn't know what it meant. So.
Yeah. So if you're married, okay, this is a question, and you can tell us if you would be the right person to answer this. So you're saying you file your taxes with your husband. Is that something you should always do, is file together and put your expenses and your income together when you're filing? Or is that something you have to do? Or do you ever file separately? What's the rationale behind that?
So this is where a CPA or a tax professional is going to come in and be the best person to advise you on this, but I can give you answers here.
Okay.
It's dependent on your situation. I'm going to give you another example. My
Okay.
sister is a physical therapist. She is on a loan forgiveness program. She works in a nonprofit. So for 10 years, if she stays working in this nonprofit sector, they take her student loan amount and they make it like way small compared to what it should be, way big. After 10 years, the loan is forgiven.
Oh.
So my sister and her husband, while married, have to file separately because if they take his income into the equation, it shoots them up too high for her to be eligible for this program. So it's circumstantial to what's going on in your life, if you should file jointly or if you should still be separate people. And your accountant, your CPA, is going to be the person who will tell you which way to do that. And that's always why I also advise you do use an accountant to file your taxes and you don't go TurboTaxing it yourself if you have complicated tax scenarios.
I didn't even have complicated taxes, but I did use TaxSlayer for a couple of years and I messed it up every time. So
Yeah.
take it from this actual expert, always use, an actual expert.
Yes.
Fair enough.
Tell you yesterday, I solved a $90,000 problem for my client. Literally found $90,000 they were missing. And what I always say is I will pay for myself. And I believe the same thing about an accountant, my CPA. He pays for himself every year in the deductions he finds me, the tax credits he does. It's worth paying the fee. You will save money in the long run.
Yeah.
Totally.
Okay.
Totally. Okay. Very helpful. So
Yes.
we just spoke about W-2 employee and a 1099 contractor. Can you just quickly run us through what the difference between those two are, and then how does tax play in there?
Sure. So a W-2 employee is employed by a company. You have to complete work on their timeline, their standards, their guidelines, their handbook, right? In that scenario, the taxes are being withheld from your paycheck per pay cycle, and then your employer is paying in their portion and your portion that's been withheld. Usually, you're withholding enough that at the end of the year, when you file your taxes, you've overpaid in and you get some money back.
Mm-hmm.
Simple. Sometimes people elect not to have enough withheld, and then you do end up owing at the end of the year. Again, always good to make sure you're selecting like the right box when you fill out your W-4. Now, a 1099 worker or contracted worker, they're basically operating like their own business. So they set when they work, how they work. They're typically still in charge of their deliverable, but if they're contracting out for a company, there might be a deliverable that, they need to hit. They are getting paid flat. So it might be $50 an hour or a project fee of $5,000 for their deliverable. They're getting paid the cash, no taxes being withheld, and then it's their responsibility to report that income. And what will happen is at the end of the year, this is another term you're hearing thrown around, especially during tax season, is 1099, right? Which you're going to be issued a 1099 for the income that you earned from that company. You will report that on your taxes. And this is where your tax deductions come in so that we can lower down that number and pay a little bit less.
Okay. Very
And in
helpful.
theory, just to close the loop on that, in theory, if I've been doing my job right, or I work with an actual expert like you, I've been tracking all of my expenses all year so that by the time April for the US comes around, I'm not scrambling for like receipts at the bottom of a box. Is it because that I can
That
imagine that's usually
that
how it
is
goes.
best practice. Is that what everybody does? No, most people are scrambling at the top of the year. Once the year's over, they went, oh boy, what happened last year? Let me go
Uh-huh.
gather all of my things to get it together for the accountant so that I can use all the deductions. And what happens when we do that and we don't track it in real time? We miss stuff and we still end up overpaying in our taxes, which is why really watching those expenses that help us produce the income monthly is really, really important practice.
Do you have because I am totally the person who did that last year, the day before they were due, scanning through my credit card bill, looking at all my expenses, and I'm screenshotting, okay, this was the flight that took me here, like all of this stuff. Do you have a software that you recommend your clients to use to track all of this in real time?
So at my company, we are exclusive to QuickBooks Online.
Okay.
It's an accounting software. It syncs directly to your bank. Anybody with 1099 income, I always say keep it in a separate bank account so that the money goes into there and then try to spend out of there. So now you're not going across your whole life
Yeah.
looking for the expenses that kind of live all together. That bank account can connect to QuickBooks Online. And then when it comes in, you just tell it where to go. Well, that was income, that was advertising, that was travel, that was meals, that was office supplies, that was equipment. And then we're building out what we call a profit and loss report. So the top is going to show us the income that came in, the bottom's going to show us all the expense buckets we had. And then the bottom, the profit or the loss, is going to identify if we owe taxes or not. If it's profitable, the rule of thumb is 30% of that profit is what your tax bill is going to look like. If it's a loss, if the business completely took a loss for the year, you don't owe anything.
Fantastic. We're in the negative for actual experts, so there you go. I guess that's why also people have their corporate credit cards because it just makes it easier to track these expenses. Got it. Okay. Very useful. So now going into what actually is a deductible expense, could you tell us what that looks like and where people might not realize that some things they could be deducting, but it is?
Absolutely. So the IRS is going to say that the expense needs to be ordinary and necessary. So for me, I'm a small business bookkeeper. My computer, my software, my cell phone are completely ordinary and necessary for me to do my job. Something that would probably not qualify for me as a bookkeeper would be medical supplies. That would qualify for a medical office, right? So or like things I see all the time are like people try to put like their dog's bath on the business. I'm like, guys, your dog is not necessary to the company. We can't like unless it's the mascot and it's all over social media, we can't write off the dog's bath, right?
Yeah, that's so funny.
But what I will say is that a lot of things from your personal life can like every business needs a car, every business needs a phone, every business needs internet, every business needs an office, right? Like where most of us nowadays we work from our house, so we can take a deduction from a portion of our rent or our mortgage against that income, our cell phone bill, travel if we're traveling, advertising costs, especially nowadays when we are showing up on social media, YouTube, all the places
And it's
to
expensive
look
now.
our best, right?
Yeah.
What are we wearing today? That's a write-off.
I was just as you were saying that, I was like, we spend so much money on hair and makeup products or skincare and all these things because I'm putting my makeup on before getting on the podcast and being like, okay, we're ready.
I got my hair done today. Would that apply? And now I'm recording. That would apply? Would that qualify?
I always write off my hair. Always.
Oh my God. Oh my God.
God.
Advertising, because I mean, we have to market ourselves and the way we need to look. Absolutely. Every single thing that is part of your production is a tax write-off.
Oh my
This
gosh.
sweater is from Quince and I like it and might need another one. So also essential for the success of this business.
It truly is.
Wow.
Lundie and I, we've worked together for 10 years now. Previously, we were fundraising for a startup, and we were saying the startup should give us a budget for close because we are showing up on stage, speaking on behalf of this company, doing all these things. And all along, we could have been deducting it, Lundie. What have
I
we been
know.
doing?
The more you know, and this is why you're here, Diana. We're so glad because
The
Yeah.
revelation of the year.
I'm
So
tracking.
important.
Okay, that is super, super useful. So, what do you think then? That's what people can do, which is very exciting then that we've learned this. You've really opened our eyes. We're about to go crazy at online,
Yeah.
online shopping. But what's the biggest mistake that people make?
Maybe going crazy
Yours.
online shopping.
Okay, so a couple of things, right? Ordinary and necessary. So can we buy $10,000 worth of clothes for 2 podcast episodes? Probably not, right? We've got to like keep it. We don't want to get flagged by the IRS. So
Yes.
keep it, I always say, like, keep it relative to the income, what
Mhm.
the expenses are going on, right? We don't want to like shoot it crazy.
Yeah.
The other biggest mistake I see people make is that they just don't take the expenses. I'll
Mhm.
literally say to clients, do you like paying more in taxes? Why are you not utilizing the tax deductions that
I
are
just don't
available to you
know.
that we just need to go over on the personal side and grab them and use them because they're available? Also, like guessing instead of tracking, because in the event of an audit, which we know the IRS does audit, and it is typically like that 1% figure. However, once you've been audited, you are more likely to get audited again. So the guessing, like if you're TurboTaxing and you're like, just say it was $2,000 of office expenses and not actually have
Yeah.
tracked them and saying, no, it's 220526 and here are the expenses that add that, so that if the IRS came back, we have the proof to
Yeah.
prove that this was a real business deduction. That's another place where people get it wrong.
That's definitely what I have to do a better job of this year is I would go through my credit card and like line by line and add everything up, but I need to do a better job of being like keeping the receipt or being like, here is the line item itself and tie it to the expense. Because before I was just like, okay, add up all my Ubers for work.
And accounting software like QuickBooks Online will do that for you so much simpler than you having to like long
With my
form.
phone, like,
Yeah, and they have an app on your phone too. So then it
That makes
comes in and you just tell it and then you have the totals and you have the proof because it's all
Yeah.
connected to your bank account. You know what I
Yeah.
mean?
Yeah. We used to have to, for our old job, obviously track our expenses if we were going to claim back from the company. And I was always so meticulous. Obviously, like every time we like bought one coffee, I was like picture logging it. Caitlin's like, I haven't done it in 6 months. Like they owe me so much money.
I know. I'm
I'll
like,
do it later.
Art was
Or
like, you are the biggest headache of my life, Caitlin. And I'm like, by the way, you guys owe me $20,000. I just added it all up.
Yeah.
Like, what
Yeah.
is
She was
wrong
like,
with you?
wow, thanks. Thanks for the cash
yeah.
flow hit there, Caitlin. Yeah.
Exactly.
My dad does it still, I think still to this day, so old school. I would love to know if he uses a software now, but I'm pretty sure he keeps files of receipts. My whole life, he's always said, can I have a receipt for that? Like even little things. And I've always been like, why do you get like, I never asked for a receipt. And it's just funny how it's probably changed so significantly with software,
With
obviously.
technology. Yeah. And two, like, I'm always like, no, I don't need the receipt because it's on my bank statement or on my credit card statement. Like, I can go hunt it down and find it
Yeah,
digitally. I don't need the paper and to keep it in a
totally.
shoebox. Accountants don't want your shoebox full
Yeah,
of receipts either, by the way.
No,
yeah, fair
I
enough.
have the same thing. I remember driving with my dad because he's also was independent most of our life, and he had this accordion file, and so and like the it would go in depending on the category. So like his gas for his car, or if we like he had a work dinner or whatever, and he'd be like diligently filing it. I remember it like sat in the crevice between the dash where you do this, whatever that is called, and the chair.
Forget the, I don't know what this is called. What is this called?
Gearbox, yeah, yeah, and like sat there.
Thank you.
That's
There you go.
here we are,
Very
24
analog.
very analog. Okay, amazing. So this is super helpful, but then I feel like a lot of people might feel overwhelmed of where to even start with this. If that's the case, what would be your advice if someone is super stressed, like I don't even know how to begin?
Sure. So we're at the beginning of the year, so it's like a great time to just start in January.
Mhm.
Go back. Even if you're listening to this episode and you're way far past that, cut it down into small actionable steps. Okay. So if it's worst case scenario and you've got stuff everywhere, you've got income coming in one bank account, expenses going out at 5 different places, start to just make yourself a Google sheet, an Excel document, something where you can start to compile the information. And what I would do is date it, and then like date, name, what it was for, and the amount. So make one tab income. When did you receive it? Who was it from? What was the amount? So that we're totaling how much income we made. And then on the next tab, expenses. You could even go as far as to make like little buckets of expenses if you wanted to start lumping them together, like travel and meals and office expenses, advertising costs, and you can start compiling them. And so what you should do is go back through your bank statements everywhere that you've spent or received money. And just like you were saying, Caitlin, you're kind of like highlighting, but get it into that digital document because it's going to be able to, one, we know in a Google Sheet or an Excel, we can put a formula in there and sum the numbers, right? And that's really your most basic, like easiest way to just start putting it together. And what I always advise people is like, take yourself on a money date once a month. Go grab your fancy latte that you want to, go sit at Starbucks with your laptop, go through, put it all into your spreadsheet, and look at it. Because the other thing people aren't doing is they're not paying attention. They don't know how much money are they making? Is the business or the side hustle that they've got going on even profitable? Or are we just living off of credit and on a hope and a prayer that we can pay our bills? So the more attention that we can bring to this and the more formality that we can sort of like every month I do this one thing and that sets me up for success. It gives us financial confidence. And it also keeps us prepared all year long to show that if we are showing a profit, if our income is more than the expenses we have to offset it, we're going to owe on taxes. So are we saving money?
Right.
To be prepared for that, because the tax bill does come and it does stink if you are not prepared for it.
Okay.
Learning so much.
How far back can you go? Like if someone's listening to this and they're like, "Oh my gosh, I missed so many things I could have deducted in my 2024 tax return." Can you like bring those forward and deduct it from your 2025 one?
Has to stay in the same year.
Okay.
Sometimes, though, I will say, and I do see this happen, where bad bookkeeping went on, lots of missed deductions happened. The tax return got filed. The client paid way more in taxes than they probably should have. And what you can do is amend a tax return. So a CPA can amend it and say, hey, actually, we had all these expenses too. And then you get some money back and have it corrected. So that's an option. Always. But no, we can't say, I had all this expense in 24 and I'm going to try to use it in 25. It has to happen. We have to use it in the year of the tax return.
Yeah.
There was definitely a time that I did that, but in the reverse where I got a bonus, I think in 2024, but then honestly, it's not even worth getting into for the purpose of this story, but I think I paid tax on a bonus twice because I was confused which year I got it. Like that's how bad my like brain is about this. I've since hired an accountant, so don't worry. But this is helpful in terms of booking. Can I ask, kind of in that same vein, when should you work with a bookkeeper such as yourself versus it seems like everyone should work with an accountant. So who should work with a bookkeeper versus just trying to manage on their own?
So it really depends on a few things. I don't want to blanket say if you're not making any income, you shouldn't have a bookkeeper. Not always true, because like you guys just said, you were working for a tech startup, right? Who's fundraising lots of money. So I do have clients who are like in the beauty industry formulating products making $0, but they need to be really meticulously tracking their expenses for their investors. That person needs a bookkeeper, 100%. I had a meeting yesterday with a friend of mine who has a female community out in Montana that is starting to make some money. And I just looked over her QuickBooks account for her. She's maintaining it really well. And I'm like, girl, you're not ready for me. You're doing good. I was able in 30 minutes to sit and just troubleshoot a couple of things because we're friends and show her how to take some personal things that didn't hit the business, bring them over, And my advice to her yesterday was like, when we hit about 6 figures of top line income, when we're starting to make about $100,000, then it's time. It's time that the side hustle needs a bookkeeper, because a bookkeeper is going to cost you about $500 a month flat. So you want to be able to that's a write-off. Yay. We can write off the bill, right? But to have the expense on the business, let's make sure it's worth it and it's time. And I think that that's a good threshold of like, once you start bringing in about $10,000 a month-ish, $8,000 a month, you want to really make sure you're utilizing your deductions well so you don't get hammered on taxes. And that's where you've got a bookkeeper really organizing that and also advising best practice of not commingling your personal and your business money and things of that sort.
Sure. That's such a helpful rule of thumb about 6 figures, which one day, actual experts, watch this space, Diana. We will be in your inbox.
Yeah.
Hopefully
Sliding
sooner
into your
rather than later.
DMs. You're like, we hit that number.
And
Okay.
can I ask also, sorry, Caitlin, one more question specific to your business, just curious. Do people work directly with you, Diana, or do you have a team, or do you just hook them up with the software and then say like, I'll review every quarter? How does it work like within your agency?
So we are a team of 15 remote folks. We
Wow.
turn 150 sets of books a month. So we've got a lot of clients, and I need a lot of people to service those clients. What I like to say is everyone that works with my company has access to me, my brain. You know, I'm always willing to jump on a call. Do I employ people that are even smarter than I am? Yes. And they're awesome and they help and do all the things too. Everyone has access to me. So if they work with me, yes, you're gonna work with me. But you are also going to be really well taken care of by people who are really good at bookkeeping, oversight, strategy, and all of the things.
Cool. Congrats on scaling. That's amazing.
Thanks.
So
Yeah.
cool. And do you just work with US tax residents or
Yes.
okay. Yeah.
Yes. US currency only.
US currency.
Then it gets real complicated when
I
you start
know.
dealing with other types of currency.
Fair enough.
Totally. Okay, back to the close question and deducting that. I just want to know, because I know this will be a question from people listening, if they are a W-2 employee, so the full-time, can they deduct, if they have to buy clothes for work? Is there like a threshold that they could potentially deduct that?
So yes and no. The IRS gives a standard deduction to everybody. So I don't have the statistic, like the actual fact right here with me, but they give
I think we have it. It's
do
14.
you have it?
14,000.
It's $14,000, right? 14,600 for a single person,
Yeah.
29,200 for a married person. Look, I did have it right here.
Well done.
And
Yeah.
there's also things like a child credit. You get $2,200 for every child that you have. So what you could do as a single person is you can add up all of the expenses that cost you to do your job, right? Most cases, it's not going to be over the standard 14,000 that they're giving you.
Yeah.
So that's where you can keep that. And I've done that in the past where I'm like, this was I had preemie twins.
Yeah.
We had a lot of medical expenses. So I was counting my receipts and bringing them, and they were like, yep, still under the deduction there for the medical for you. You know, it's not worth itemizing it. It's worth itemizing it if it's going to be over the standard.
Got
It's
it.
a lot of clothes. 15K almost.
That's a lot.
A lot of clothes.
A lot of hair appointments.
So does that standard deduction, that's only then for W-2 employees, not for the 1099 employee? Or
Right.
Correct. Okay.
So sometimes some of us are both, right? So
Yes.
you're going to get the standard against your W-2, and then you're going to itemize against your 1099.
Okay.
Understood. Okay. Understood. Interesting. Because I was like, I've never hit the threshold of 14,600 deductions, but I didn't think that had ever been applied. And I've always kind of worked as a 1099 employee mostly. So that makes sense that does not apply to me. Okay. Got it. Helpful to understand.
Okay. Before I go into our last question, Lundie, do you have any that you want to jump in with?
How late is too late to April? What's our tax date? April 20th? April 12th?
April, it's usually around April 15th. I don't know what it is this year.
Yeah.
I have to look
I
at
was
it.
wrong on
But
both. But around then, like if someone reaches out to you on April 13th, like help me, are they going to be turned away? understandably.
Yes. Not turned away, but what I would advise is you need to file a tax extension. So then we can file an extension. The taxes aren't due till October, and then we can go and do the catch-up work that we need to do so that you don't have to pay way too much money in your tax bills. Yeah.
Okay. Yeah. I prompted one more question before our final question. Can I ask it? What is the craziest? So you mentioned a story of saving a client $90,000. Like, what is the craziest instance? I don't know how much you can share, but like, where does that money all come from? What was the kind of mistake being made there? That's a lot of money.
Sure. So in that specific situation, this is a multi-medical practice. So they have like a management company with 15 different medical practices, and they're moving a bunch of cash around to cover payroll up to the management level. And what I uncovered yesterday was that they were in 2025, they didn't collect $90,000 from each office to pay management. So the management company took a hit. And so basically they were leaking money and we didn't know why. And we had to go like detective figure it out. So
Wow.
now they're not going to make that mistake again. But in a smaller sense, right? In a small business sense or a side hustle sense, my graphic designer is a perfect example. She came on as a client last year, and accountants, they're not going to work with you. Like a CPA is not going to work with you on itemizing your deductions. They're going to say, give me what you have. Here's the income. Whatever you provide them for the expenses, they're going to file it. A bookkeeper is going to sit and look at it like a puzzle and say, what's a good bookkeeper, I should say, because not all bookkeepers do this, but what's missing? So the first thing I do, like when my graphic designer came to me, I'm like, girl, where's your car? Where's you are working in Chicago and Nashville. We got to have some office rent here. Where is that? Where you
Right.
go on site to branding shoots and do stuff. Where's the travel that happens there? Where are the meals that you eat when you're there? Oh, that's all on my personal side. Oh, and I paid this contractor and this contractor and this contractor out of my personal account. Well, we got to take all of that over here to help you so that you don't get nailed in taxes, right?
Got
So
it.
that's something that's like really, really common. And it's just because creatives just don't realize like what's available to them. And in the
Totally.
United States of America, it behooves you to be an entrepreneur because the tax benefits are large. But I would be failing the listeners if I didn't mention this part. What are your goals as a human being? I ask all of my clients this, and I give this as an example. I grew up born and raised in New Jersey my whole life, Jersey girl. And 3 years ago, my family, we moved to Florida. And my business at the time was like, I don't know, 2 years old. And I strategically needed to make my business look very profitable on paper because when I moved to Florida, my husband was taking a pay cut to take a different job so we could move here. And we needed my business income along with his W-2 income to secure our mortgage. So what we don't ever want to do, we always want to keep our life goals in mind when we're talking about tax deductions because what it says on paper, what your actual income is, that adjusted gross wage, right? That's how we get funding. So if we need a mortgage, if the business is a coffee shop and they want to go buy real estate, we have to show strong financials. We have to show more profit. We're going to pay more taxes. But what are our goals? And we want to make sure that our tax return and our profit and loss reports, right? Everything that goes along with our business matches those goals. So I did that and I showed a strong profit. I secured that mortgage. And when I moved to Florida, I strategically used every deduction available to me in the next year to tank my profit to look less profitable on paper because my life didn't need me to pay less in taxes. So it changes and it's fluid depending on what you're doing in your life.
That is so crazy. I would never know. And obviously, we did an episode called What the Fuck is a Mortgage with Kristen Ambos. It was one of my favorites. And obviously, your credit speaks to your adjustable income and blah blah blah. But I don't make those connections in my day-to-day. Like in my head, it would just be the less tax, the better, always, no matter what. But I didn't make that
Right.
link.
We need some funding. Same thing goes for a small business. If you are looking for a loan, they will only loan you what your profit was the year before. because they want to believe that you can pay it back. So whatever you're showing as your profit, if it was $50,000, that's what they're going to loan you, $50,000. If you show $50,000 and ask for $150,000, they're going to turn you away because they're going to say you don't have the money to support that loan.
Even
so it's just important to
Right.
keep that in mind so that we can be proactive in the decisions we're making as we're making them.
That is a huge caveat.
Which is that also like the last bit is why we don't want to go through the whole year and then look backwards and go, what happened?
Totally.
Because we really should be looking forward to what do we want to happen and what actions do we need to make right now to make sure that it can happen.
Sure. Oh,
So helpful.
so helpful.
Okay. I've seen on Instagram these people who are like, I made my husband my software support so I can write off my vacation and like call it a business trip. Is that kosher?
Not really.
Okay.
Not really. There are ways to do it. You'll see right now, a lot of people will put their children on payroll. That's a real thing. If you can find a small job inside of your business for your kids to be on your payroll, even if that's modeling on your website or social media content, and, you know, pay them $1,000 a month and let that add up for them for later. Great wealth move. You know, I see it too. I see like, we rented a private plane and we took the whole family to Bora Bora and we called it a board meeting.
Yes.
Is that ordinary and necessary for your business?
Very true. Okay.
I would say you could try it, but the IR, like, your risk level of audit is going to go up, and then you pay the price there. So it's just, how risky do you want to be?
This is why you don't follow Instagram and you speak to an actual expert. Because I'm like, Stephen and I went to Miami last weekend.
Stephen does help with tech support.
It's our in-house tech support. Okay, so then my last question is, if there's one thing that every woman should know and think about when it comes to tax deductions, what would that be?
Use them. Period. Use them. Educate yourself about what they are. How can you use them in your life to pay less money in taxes? Track them and implement the strategy. Do it. The most common thing I see, especially with women, and we're getting so much better as women are just like, I mean, this is the time for women, right?
That's why we're here.
But they still want to bury their head in the sand and not look at it. I can't tell you how many clients I've supported through divorce because husband has been managing the finances and wife's just like spending cash and doesn't know. And then they get a divorce and she has no access to credit and she can't even rent a house without his help. Like, not okay. We need to be educated on our own independently about our money and the way the world works with money, finances, taxes, so that we can succeed, period.
We love it.
Amen.
This is the whole point of us doing this. Knowledge is power, but money is also power. And the more money in your pocket, the better.
Absolutely, girls.
Amazing. Thank you so much. This was fantastic.
Such
So
a
great.
pleasure,
Thank you for having me.
So much applicable knowledge. I have changes I'm going to make. I'm going to call my sister, tell her we have some changes to make.
The same. I'm going to call my sister. She does so much social media content. I'm like, Juliet, wait till I tell you what I just learned. Or I'm going to be like, listen to the episode.
Love
Absolutely.
it. And we'll make sure that your contact is in the description if anyone's in the US and is starting to make six figures and needs a bookkeeper and someone to help them out. Get in touch with Diana Gleason.
I'm your girl.
Thank you. Thank you.
Thanks for having me.
And welcome to the debrief, where we discuss things we needed a little more clarity on.
Sorry, my message made no sense, and I realized when I changed it on the calendar invite, I just changed mine and not yours, so that was unhelpful. And now it's 6:30 in the morning.
No, it's only 7:30.
Oh, okay. I thought it was 6. Well, you
No,
but
anyways,
should
happy
we do a
day.
quick?
Yes, because then I need to jump in 20 minutes and go to office.
Fabulous. Tax deductions.
Tax deductions, which
Have
is
you done your
okay. I have done 95% of it, but I know after this meeting, lol, we're really in our work mindsets. After this interview, episode. Literally, my brain is not here. After this episode, I was like, whoa, there's a lot that I could add into my tax deductions that I didn't. And me being like the least organized person in the world, I have like 3 different credit cards, debit cards, whatever that I've been spending on. And so I need to just sit down and go through everything. I think I have most of it in, but there's a few things I'm like, oh, those were big expenses that I definitely could.
It's worth doing.
It's worth
I
doing.
think this is going to be implemented for me next year because Guillermo, I was really proud of myself for getting that like out the gate, and it was done by pretty much, I think just before we recorded this, or it was just after, but the ship had sailed, quite honestly. And so some of my takeaways are like the practical steps that Diana put in place for us. And I was like, okay, from now on, I think tracking income in a spreadsheet and tracking the bigger outgoing expenses, just like in a Google sheet. It doesn't have to be
100%.
fancy. I'm not getting QuickBooks. I'm not doing that. So I might start a sheet. Are you getting QuickBooks?
No, but I downloaded Claude Cowork, which is like an app on your computer, and you can build it to do certain things. But I took all my work invoices, which includes my expenses that they reimburse me. And then I screenshotted my other incoming money and then also put in my expenses on my Google Sheet and just sent it to it. And I was like, I'm an Ontario resident and I'm doing my taxes. Like, can you build this Google Sheet for me? And they did the entire thing, including noting like, this is an expense that was reimbursed, and put it in like red, blah, 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 all this stuff. It was completely done with all of the formulas. And Lundie and I get paid in different currencies than we live in. So whatever, take that as you will. And it did the automatic conversion because I had to be like, oh, I earned X amount in pounds and then I'm paying taxes in Canadian dollars. And it took the spot rate from that day and was like, pulled it from the internet. It's something that would have taken me literally weeks.
Days. No, truly. Okay, well, that's good. Literally, I see the memes where it's like the boomers who are only using 1% of AI's capabilities, like still just using ChatGPT for recipes, and I'm like, I'm still just using ChatGPT for recipes. Like, that's really crazy. So, anyway, I'll explore that in the coming weeks, months for the upcoming year.
100%.
But all to say, Diana had good advice that just get started, do something even simple as starting a Google Sheet, just start tracking. If you really want to be fancy, then keep your 1099 income in a separate bank account completely and then just spend out of there. So at least you're just looking at one bank account compared to Caitlin looking across 5. Thank you so much.
It's not easy. Other one is the whole LLC thing, which we need to figure out for ourselves for the podcast. But it is so true that you do need to protect yourself. And so if you do have a side hustle, I don't know what it costs. I think it's super minimal, but something to look into. Obviously, we haven't even done the research ourselves.
The protection piece is like work, because I was always kind of like the tax and the whatever. Like the protection piece that no one can come after you as a person and individual if anything goes wrong is probably important. So yeah, we need to get on that.
Yes, exactly. And then second one is the revelation of the year, which I think falls under the pink tax, at how we can expense our production costs, which includes hair and makeup on the podcast. Because I was like, ooh, I feel bad about this, like everyday ordinary expense. I'm 100% sure guys are expensing golf trips with their buddies or like on the golf course, this golf round, whatever. But I do think this falls under the pink tax where we're like, ooh, we don't know if we can do this, or like someone is telling us we can't do it. But it is an expense of the podcast and it is an expense. Our hair and makeup is expensive and we should be able to expense it. So thank you, Diane.
We're marketing ourselves. I know. That was a good one. And then my last 2 that I thought were good to just know. The 6-figure rule of thumb. So like when to actually engage a professional bookkeeper at around the 6-figure profit revenue mark. You're bringing in about 6 figures.
Yes.
Is around the time that you should probably engage with a professional. And she said it's worth the money. She pays for herself. So the amount that a bookkeeper will save you in that process, $500 a month is what she quoted.
And it's tax deductible.
We're going to be at like dinner parties like, and It's tax deductible.
Literally, Kate just said, we need to be sedated at this point.
Help us. It's a Monday. And then the other one that I thought was interesting that I hadn't realized was that your tax strategy, I mean, in my mind, I was always like, pay the least amount of taxes, always and forever would be your goal. But her point at the very end that your tax strategy actually depends on your like long-term goals, I think was actually so important because sometimes you actually need to pay more tax to show that you're making more money so that you can borrow more or get a mortgage or whatever to show that you're like at a higher level. So like who knew?
Yeah, take your life goals into consideration.
Yeah,
I'm
I was
fascinated
like,
by
who
her.
would have thought? I know.
I also
And like
love
what a
her.
vibe and love her energy. I know.
I played a few clips for my mom because I was with her when I was editing it, and she's like, I love this woman. And also her very, very kind words about how much she loves our podcast. I played it for my mom. She goes, can you cut that into a clip? I'm going to put it on my Instagram. And I was like, yes, I can, Mom.
Thanks,
Here it
Verity.
comes.
Yeah. Yes, Verity. Please do share.
Yeah.
Shout out to Verity and truly shout out to Diana. We had such a great time with you. Thanks for learning with us.
Yeah, knowledge is
See you in
power.
2 weeks.
LFG. Woohoo!
Woo.